Kenya's M-Pesa has several components worth emphasizing. First, there was a large base of mobile phone users at the initiation of mobile banking. Mobile phone use started at 0 in 1999, and at the start of the M-Pesa pilot project, 30% of the population owned a mobile phone. Part of the reason for the rapid expansion of mobile phones and of M-Pesa was the underlying need for remittances to be transferred. Some 17% of households in Kenya depend on remittances for their income. Moderate urbanization, 20%, required urban-rural transfers, which dominated international ones. There were also a large number of rural people willing to act as agents, a part of the system called cash in, cash out, or 𝐃𝐨𝐧'𝐭. Moreover, the population is relatively young, with 20.3% between the ages of 15 and 24, a population able and willing to use new technologies. M-Pesa was also an inexpensive and flexible use of technology. The cost of a landline phone call was considered very expensive, whereas mobile phone calls and SMS messaging was very cheap. This meant that the additional charges for moving money would still be relatively cheap when added to already low communications costs. Another factor was the favorable conditions for bank penetration into new technologies. Kenyan banks were looking for new business in 2007 when their large borrowers were postponing large projects during the 2007 political riots. They were moving to serve the lower income segment with the expansion of branches and ATMs, but they saw the advantage of using a well-respected mobile phone company, Safaricom, that could lower costs, which meant banks could take advantage of economies of scale in serving what had previously been an expensive segment to reach. A 2009 survey noted that within this low-income segment of the population, the users of M-Pesa are relatively wealthier than non-users, with higher expenditures and higher wealth. Moreover, M-Pesa users are more likely to be among the already banked segment of the population compared to non-users. After 2009, the M-Pesa accounts were formally allowed to be linked to bank accounts, and this spurred the use of both products. Another critical factor was that of supportive government policies. The Kenyan government was supportive and has been adaptive over time. The Central Bank of Kenya, the CBK, allowed Safaricom to operate a parallel payment platform to the official one, only requiring that the e-float be placed in a trust account, which was owned and operated by Vodafone, Safaricom's parent. To mitigate the potential credit risk and comply with anti-money laundering rules, the sizes of transactions were limited. As M-Pesa grew and other mobile money providers have entered the market, the government has adapted to the increased size and numbers of transactions by now requiring mobile banking providers to be licensed, and the CBK has the express authority to oversee all payment systems, including mobile money providers, to ensure the safety and efficiency of their platforms. Hence, they are now inside the regulatory perimeter, whereas before they were not. Overall, then, there were several conducive features during its takeoff phase that have made the Kenyan M-Pesa be successful.